One of your next guests says the markets will find their footing before April 2nd, when the reciprocal tariffs, at least for now, are set to take effect. Joining us now for more is Tom Lee. He is the head of research and founder of Fundstrat, also a CNBC contributor. Also joining us, Nancy Tangler, Laffer Tangler Investments CIO and CEO. Tom, listen, I understand it's a different White House. Every day we get a market-moving headline. A lot of people, I think, honestly, I'm just going to say it, they don't want to be neutral. They don't want to be data-driven. They want to be angry. I get that. But history says that markets will recover, right?
Yes, they've recovered every time. One thing we have to keep in mind is when markets fall this quickly from a 52-week high, I mean, just remember, less than a month ago, we were at all-time highs. That is a market pricing in a crisis. I'd say we're almost 50% pricing in a recession, and we're assuming there's no Fed put. Now, the Fed is in a position to cut rates. That really should mitigate the downside. And I do think two other things that investors have to keep in mind, because many people just want to get out until April 2nd, is number one, I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the U.S. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the U.S. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses.
And that was only, Nancy, nuclear holocaust. I mean, that literally was, we're going to break the world in half with ICBMs. I mean, that was, compared to tariff worries and a slowdown in the economy because we might slap something on European wine or steel, seems very small now. That said, again, and I'm not saying the markets are going to recover next week. I don't know. We're talking about history, and I don't like to bring up politics, Nancy. It always makes me feel like I need a shower, but I will ask you this. How much of this correction that we are seeing do you think, 100%, 50%, 0%, is political, is man-made, is tariff-made?
It's funny you asked that, Brian. It's good to see you. If you look at the consumer sentiment numbers today, and I commend everyone to read Kelly's piece that she wrote this morning, but if you look at behind it by political party, what you see is that Democratic sentiment has not been this low, especially on expectations, ever. And so if you look sentiment overall by party, Democrats down from 91.4 all the way down to 41.4, while independents and Republicans are down somewhat but have held up. And then on expectations, down from 28.2 down from 93.1 to 28.2. So that's driving some of these sentiment numbers that the market's keying off of. And I would just point out that the bond market is not panicking. And so this notion that we're going to go into recession because the Atlanta Fed GDP Now number was revised down, that was driven by imports. They were up 70% in January as purchasing managers trying to get in front of tariffs. So I think just like in 2022, this will all settle in. We are seeing decelerating growth, but that's good for many of the names that have been punished, the reliable earnings growers in technology and consumer discretionary and some financials even. So I think we will continue. This is a correction. We needed one. We get one every 12 months. And so now the question is, have we hit the bottom? Do we have a little more to go? But I don't think we're in a bear market.
Tom Lee is back to warn Nvidia holders about something dangerous that is looming in the distance and threatening Nvidia. Today, the spotlight shines on a Chinese startup wielding an artificial intelligence framework that challenges the dominance of Nvidia's chips. This development sends shockwaves through the industry, setting the stage for a high-stakes showdown between technological giants in AI. Welcome back, everyone, to Investocracy.
Nvidia kicking off its GTC conference today. Jensen Huang expected to deliver a keynote tomorrow night. Joining us now is Melius research analyst Ben Reitzes. He has a $170 price target on Nvidia and a buy rating on the stock. Ben, it's good to have you here to kind of set things up. I mean, you suggest that that Jensen Huang should be able to reassure investors on the big picture vision here. What do you think the hurdles are? What are the bogeys for sort of what he has to persuade investors of at this point?
Well, this time last year, the key thing was that it gives you confidence in the growth for the next year. So what we're looking for is things that help us know the long-term growth path a little better. Stuff like how much data center infrastructure is needed to support robots, autonomous vehicles, and then the new product roadmaps, like going all the way out through 2027. We should actually hear about the Blackwell Ultra, but then next year we get Rubin, and then hopefully he'll preview what's after that. This is usually a real mecca for AI, and we think a lot of partners will be there. So hopefully it gives investors a better feel for long-term growth. However, the short term too, with all the worries, we should be able to get some good checks on demand.
Yeah, I guess there's a big debate too as to whether the DeepSeek announcement and the quick rethink of how long the runway might be for the very capex intensive part of this AI build out, whether it's going to just put a lid on valuations in general or, essentially keep these stocks on a shorter leash. You mentioned, and as I've discussed this before, the way Apple traded after the introduction of the iPhone, and the market quickly said, well, they're over earning. They can't keep this up. This is a hit driven, massive kind of hardware cycle that we can't extrapolate into the future. And the stock got really cheap. How does that bear on Nvidia here?
Well, very similar in our opinion, because they're an industry pioneer and they earn a huge portion of the industry's profits. And I think that over time, Nvidia is going to have similar things as Apple, where they have to transition a bit more towards software. So I think Jensen's also going to announce a lot of software advancements, his NIMS and Cosmos architectures for building. And I think that those things will help drive their software revenue through consumption over the long term, which could help drive their multiple. I think right now the multiple vis-a-vis its growth rate is pretty ridiculously cheap. So the market's sitting there saying, hey, there's going to be a downward revision at some point because no one can keep up this kind of hardware growth rate because of the, just a risk of an overbuild. And I think the degree to which he sets up that what's akin to the Apple services, the software business, the ecosystem, the DGX cloud instances that create that recurring revenue over the long term really is the key to this multiple. They're the only semis company that can really do this and make that transition. And we have a lot of confidence in Jensen. He really obviously gets it a lot better than we do.
Amidst the recent market chaos, Chingcheng.ai's Chitu steps into the limelight, promising a future where Chinese-made chips rival the best in the business. And not only that, but they are moving at the fastest pace to improve efficiency and rely less and less on Nvidia chips before they create their very own. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
You've made the point, Ben, that I think the stock's trading, 40% lower in terms of a forward PE multiple than it was at the introduction of ChatGPT, right? Or right around the launch time.
Yeah, that's right, David. It was around 40 times earnings plus when ChatGPT was announced. Now, obviously, they've seen thousands of percents of gains in their net income, et cetera. But the funny part is it is cheaper, in that mid-20s multiple, even on this year's earnings, showing that folks are really worried about the long-term growth rate decelerating quite a bit. And I think that this is the kind of show where we get more confident in the long-term growth rate because all these partners are going to be there. You're going to see that this guy drives the industry, this company drives the industry, and it's almost irreplaceable, obviously. So we're hoping to get that good feel and hope we hear a lot more about their TAM, which is pretty open-ended.
Yeah, I mean, with so many of these stocks, positioning and sentiment has played a big role, I feel like. I mean, Intel, for instance, up another 8.25%. Speaking of, just off this new CEO announcement. So I wonder what you're hearing about Nvidia at this point and how much has changed over the last few weeks, given the sell-off.
Well, it's all about whether right now there's a lot of worries around the Trump administration keeping the AI diffusion rules, potentially banning sales into China, and then obviously disrupting the economy, which then, God forbid, any of the hyperscalers change any CapEx plans. Nvidia obviously would be hit, along with many others. And that's really the cloud that needs to be lifted. We wrote kind of tongue-in-cheek that we were hoping Donald Trump would show up and just say, hey, all's clear. But I think those issues will linger. So I think that, unfortunately, that's going to create a little bit of a multiple hit on the stock until we clear it. But we should clear it, by next year. I mean, there should be some rules of the road.
Yeah, so the cloud, you're waiting for that to lift as to whether these guys...
The market is now more anxious than ever as statements highlighting the seismic impact of Cheetu and its prowess in outperforming Nvidia's A800 GPUs were flying left and right. The rapid evolution of AI technologies reflects a global shift in power dynamics as Chinese tech giants like Baidu Inc. and Alibaba Group Holding Limited join the race, unleashing their own cutting-edge models. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
But the AI chip leader will have a chance to shine this week as it kicks off its annual GTC Developers Conference today with CEO Jensen Huang giving the keynote tomorrow. Analysts expect him to showcase a revved-up version of the new Blackwell chip and are hoping to hear more about the next-generation chip called Rubin. Let's bring in Jordan Klein, tech media and telecom sector specialist and desk-based analyst at Mizuho. Jordan, I read your note every morning, so I know you've been getting ready for this big GTC Developers Conference. What's the number one thing you want to hear from Jensen Huang?
Well, it's a great question, Seema, and thanks for having me. I don't know if there's number one key thing that everyone wants him to say. I think you previewed it well. It's going to be all about the new products. Some of the things that I think people would want to hear is probably something he's not going to talk about, and that's more the macro, China restrictions, specific spending levels by, their big cloud hyperscalers. Those are just things they don't really talk about. They do have a meeting with investors, I think on Wednesday, middle of the day, where the CFO and Jensen will address Wall Street analysts. That I think will actually be pretty important. But as you said, all the focus is going to be on the new products, when they come out. Maybe if he can address the ability to get these products to the customers at a more expedited pace.
Could this truly be the end of Nvidia's AI chip dominance? Or is it perhaps that this Chinese company is fanning the flames of doubt with nothing concrete to show for it? Only time will truly tell which is which. But as it stands right now, Nvidia is in a position where it needs to prove itself over and over again. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.